Hey everybody, Brian here from quantlabs.net. All right, let's talk about risk management. I've done some videos in the past on it. As we move closer to an actual live trading system, these are the last pieces that I'm putting together to be included as part of my so-called trading system. Now, back in the past, a few months ago in February of 2015, I focused on a couple of webinars provided by MathWorks. They were pretty good. Actually, they're really good. They're excellent, actually. But the problem with them is that they have a front end for Excel. And for those that don't know, I was hacked back in December with Windows, and that was now, like I said, back in December. 4 months later, to April, May, we're back at it again with just systems needing to be updated and fighting parasites, malware, viruses, all that crap. So I've pretty well come to the decision that I don't want to be on Windows anymore or anything Microsoft related, just due to financial concerns, security concerns. So I'm wanting to move this server and put it onto a Linux box for remote access, not Windows. I can go on about it, but I'm not going to do that. So because of that, that's changed the requirements of me not wanting to use the Microsoft technologies, specifically Windows. Nothing wrong with Windows itself. So as a result, I knew that was coming. Sorry about that. And basically, with with my recent efforts of putting all hands-on deck efforts into Matlab, my choice pretty well is to use Java as a front end and work with Java jar files, executable ones that can be generated from Matlab, and then use those as part of a GUI or a front end, and that can be done fairly quickly using Matlab Guide. So I'm going to show you a couple of new ones I've not shown before. I've gone through the file, Matlab File Central. It's a repository of Matlab projects, and you just do a search on risk management. I found a couple of projects that I'm about to show you as well. So here in my Matlab 2015 I've got the first project. Part of risk management is using value at risk, VAR. A lot of the big pros use it to monitor their risk. So I'm just going to run this very quickly. So we set a confidence level on a normally distributed portfolio and returns, and calculate our value at risk. Now, this is the client application or file script, and this is the main one. It just generates a very simple, hang on here, wrong one. So it'll generate a plot, just a normally distributed histogram, and these ones in the red are the cutoff of the confidence level of, I believe, set at 95%. So that can be used as part of the solution. Also, let me show you another one. I've gone through a bunch, and I'm going to pull up this one, which seems to be probably the best one, the simplest one, without using the front ends of Excel, which are really good, but due to the fact that Microsoft has promised that you'll be able to take all the Excel add-ins and they'll be universal across Mac, and I don't even know if they have a Linux version of Office, but supposedly the add-ins are going to be universal. I still don't trust it, and again, will Matlab, the add-ins they generate, be up to date? So I'm, like I said, going to stick with the Java jar front ends, and this next example is an example of that. Typically, this is a good project, this risk evaluator. Sorry, my French is horrible. I'm going to just load it up through other means. They include a nice little document on this using extreme value theory, as well as I'll show you some other things. I hope I got this right. Anyways, let me just run this. This is the one I'm going to run. Alright, so here's the front end. This is a typical built by guide, I would assume. You load in the data, S&P daily. Let me just see what that was exactly. Daily change. Okay. And there, gotta load that in. Alright, so go start. Takes a couple of seconds. So we have our VA, our confidence level at 95%. Return set of is in years at 10 years. Starter up. So it takes a little bit to generate. We have our plot for historical data, our PDF I showed you earlier. Let me see if I can expand this. No. Anyway, so we have our extreme value on the empirical PDF, as well as that EVT I was saying. Now here is the CDF. If you've been watching Paul Cottrell's, Dr. Paul Cottrell's videos in the past, he's introduced these CDFs. So here is an example of that, as well as, I'm not even sure what this one is, but using a pair 2 distribution, which you can use for comparison, which has been shown in some of the other webinars I've listed on my blog from the other MathWork webinars. So this can be pretty useful once you can properly understand the math behind it, what it means. But I just want to show that. Now, there's a bunch of other examples I'm going to show you brought up by a person by the name of Attilio Miucci. Attilio Miucci is well known for doing risk. He's got a boot camp in New York every year in the summer. It's fairly affordable for 5 days. Also, he's got a book series on it. He's got tons of Matlab code on risk. So I'll show you some of those more advanced risk management projects that he's got that are available. So I'll show that in another video segment. All right, second segment in this video, the more advanced Attilio Miucci. Now, these are available again on the Matlab File Central. You can get these also through the book that Attilio Miucci has written called Risk and Asset Allocation. And there's a ton of articles and sample code that you can use in his book. Now, this is just one example. This is for swaps. I mean, most of us won't be doing stuff like this, very advanced derivatives. But I just want to show you some of the capabilities from this. Wrong script. So what it does, it just basically has a dispersion of all the available tolerances that they have here within these red ellipses. But I just want to show you some of the advanced projects that he's got and samples. I'll just pull up the other one here. This is the second one. He's, like I said, just get that book if that's something that you're interested in. I am, because I'm really getting into that stuff, the risk and asset allocation. All right, so this one, multivariable variant diffusion of location dispersion ellipsoid. It's PhD level stuff. So, oh, then we just ran that. Shame on me. Yeah, here. Okay. So let me just clear the workspace here. All right. So we always, with Miucci, he's got the S underscores, the actual starting script. Okay, let me just run this one. Okay, this one's kind of interesting. Investment horizon over 5 years, the chance of having a standard deviation return over 5 years for this particular portfolio that's a part of the data. All right, so that's one example. I'll try to run this other one here. I'm not sure it's the same thing. Okay, so stuff like that can be important. for analyzing your portfolio when you do an asset allocation. So I just wanted to show those two projects that are part of Matlab Miucci, but that's more advanced stuff. But I think the other one I just showed you, the risk of voyeur, this one here, this one, the risk, this one we just looked at, I ran earlier, the risk evaluator. I'm going to probably start at and go from there, starting out and do more advanced risk management and asset allocation, referencing back again to Matlab Miucci. So you can always get his site, all the source code and all that can be found here. It's SYMMYS. Hopefully I'll help you out. Talk to you later.